Welcome back, Mobile Home Park Nation. Here again today with another episode of the Mobile Home Park Lawyer Podcast. My guest today is a mobile home park broker. He's out of the Phoenix office, but he practices nationwide. He actually recently represented me on the sale of a mobile home park in Illinois, a deal that got a little dicey due to COVID, but we got it closed, and I'm looking forward to the next one. My guest today, thanks for being on here, Jared Bosh.
Thanks, Ferd. I really appreciate it. Thanks for having me and representing the NorthMarq team today.
You got it. Appreciate it. Well, Jared, tell us a little bit about your background, kind of how'd you get into the mobile home park space? How'd you get started? So our viewers can get to know you a little better.
Sure. A little background on myself. I grew up in Illinois, went to school there, and through that, I actually met my partner, Don Badine, out here in Arizona. We both attended the University of Illinois. Don kind of started up our manufactured housing group here at NorthMarq, previously with another brokerage. We kind of spawned off one of the large national multifamily groups and created our team here. So we kind of knew each other before. We both have a background in sales, and it was a really good opportunity. I came from a kind of a different background, not from real estate, but I was in sales, as was Don, and we both wanted to pursue some real estate ventures together. He got in first, kind of talked to myself, and I met with the team here, and it seemed like they had a really good platform to be a resource in the industry. So he brought me over. Since then, we've added another partner of ours, Chris Michael. So there's three of us here that run the manufactured housing division of NorthMarq.
Got it. Yeah, definitely a good time to get into business. I want to hear your thoughts on the current market. I mean, the last
Yeah.
several years have gotten hot, and I think with the COVID era that we're in, it's only going to get hotter. What are you seeing out there in the marketplace?
Yeah, we're seeing a really strong market. You know, there was probably a month or so lull in the market during COVID. A lot of deals that were on the market or people were thinking about marketing kind of got held off. And I mean, for good reason. A lot of owners were worried about, their tenants, collecting rent, making sure things were still operating smoothly. And, we saw an extremely resilient market in the manufactured housing space through COVID. We talked to tons of owners during that time, just try to be a resource of information as best we could. And we really saw strong performance for most communities across the country, top to bottom. And with that performing so well, we saw a lot of new buyers, a lot of new capital enter the space. So we had a lot of conversations, just high level, with folks that were looking to come into manufactured housing in the RV space through COVID. And then as we got into July and August, some of that inventory started coming back to the market. And when we saw it then, we saw extremely strong demand. We saw pricing increase to pre-COVID levels, even some cap rate compression further beyond what it was previously. A lot of deals getting in escrow very quickly. And I think we're going to continue to see that the rest of the year going into next year. Strong demand for this asset class. The debt market is extremely competitive still with very low rates and a lot of players that are willing to lend on this product type. So we see as a group, and I think the industry as a whole, is that manufactured housing will continue to be strong, if not stronger, in the rest of the year into 2021.
Oh, sounds like you know your stuff. That's a lot to unpack, but I would agree with everything you said about kind of macroeconomic trends and the debt markets. The cap rate compression has made it harder for people to find deals at good prices, in my opinion.
Yeah.
But it's good for the sellers for sure. It makes off-market deals. It makes off-market deals perhaps more lucrative, but at the same time, for you guys as brokers, it probably makes it easier for you to get listings. I would say, are you able to now produce comps that you can show ma and pa sellers, and then all of a sudden it makes your business better? Is that accurate? And how do you go about getting listings? I'm curious on your tactics. I know how you landed me on one, but I want to know how you land other folks.
Sure. No. So just a little bit of background on NorthMarq. We're a national group representing sellers. So we don't do a lot of off-market deals. We typically are hired by the sellers in transactions to facilitate the process for them, generate offers, and get them the highest and best terms possible. But yeah, we do a lot of calling to different markets that we're in. Obviously, when we have a deal listed, our opportunity listed, we're talking with various buyers around the country. Are they looking to dispose of any assets in the future? But we hit the phones pretty hard. We're calling all over the country. And obviously inventory typically leads to more inventory. So I think just being an extremely active group with a very professional process and kind of the marketing reach that we have. We're also, NorthMarq is also the largest direct lender that is private to Fannie Mae and Freddie Mac. So we have the lending capability in-house. So all of our opportunities, when we list a community for sale, it's going to our proprietary database of mobile home park buyers, but also over 40 offices and 400 loan professionals within NorthMarq that also have clients that may be in an exchange, someone that may be looking to get into manufactured housing from multifamily or retail or hospitality, some of those other asset classes that may have been hit a little harder from COVID. So we try to get a very broad reach out there and really, put these opportunities out to the whole country and all sorts of asset classes. And that usually generates a lot of interest in the assets that we're selling.
Good points. Now, you mentioned other asset classes, and I've got a background in retail, and kind of glad that I got out of that before COVID and really been focusing on the MHP space this last several years. But you also mentioned RV interest. And I know that that's kind of the stepsister, if you will, of MHP. What are you seeing in the RV space? I'm actually going this afternoon to look at a site that's a combination MHP RV. It's being pitched to MHP, but there's obviously an RV component. And I'm a little more cautious personally with RV. I think that when I'm looking at cap rates, I want it to be at least 200 basis points higher for RV, maybe 400 basis points.
Sure.
Do you agree with that analysis and this preliminary analysis? Or what are you seeing in the marketplace, especially from a lender perspective? I know that's another challenge, is getting the debt in place.
Yeah, great questions all around. So we do have several RV communities we're selling right now. A couple that are straight RV, more the investor institutional grade, and some that are a mixture. And yeah, I do agree with your assessment. There is a little bit of a basis point adder. Typically on like a straight RV park that's pretty high quality, maybe 150 basis points, but I don't think 200 is too far off on what someone's maybe looking to get. Obviously, there are some operational pieces that are added on an expense side for an RV park, a little bit more management intensive. So you're going to see those expense ratios kind of creep up above 45, 50% typically in an RV community. So people are looking for a little bit more safety net, especially in a transient market where you might have people coming and going quite often and frequently. The one thing we have seen is there are different buyers for, an exclusive RV resort compared to a mixed use where it's mobile home and RV. Some people kind of just want to stick down the line of one or the other. Having people come from the manufactured housing space, they like the community, but it has that RV aspect that they may not be as familiar with. They're not as comfortable going into that. Doesn't mean that there aren't buyers for it. There definitely are. So there is kind of those two roads you can pass of all RV, all manufactured housing, and the mixed use. From a lender perspective, yeah, there are going to be a little bit more challenges. Some of the lenders, maybe not be as favorable to RV, but doesn't mean there aren't lenders available for those. But they are probably going to be underwritten a little bit more critically, and especially on what your management expenses are. Make sure those are in line with industry standards, which we all know are a little bit higher than manufactured housing. But it doesn't mean the lenders aren't available. All the deals that we've put out in the RV space, we're still finding securing debt for those, and it can get done, but you might not get the pricing that you would get for a strictly manufactured housing community.
Got it. Now, I know one of the operating expense differences in RVs is definitely going to be utilities, because it's more common for them to plug into your electric, right? They're not, if people are there for a week or a month, they may not put the utilities in their name. And there's probably some more management expenses because of the turnover nature.
Exactly.
And I would imagine there's collection and bad rent issues at a higher ratio in that. But what other expenses are there? I mean, you mentioned it's going to push the expense ratio from, MHP is typically between 30 and 40%, depending on, who's paying water, sewer, and then obviously the size, and if there's any economies of scale, things like that. But you said kind of 45, is that the normal expense ratio for the RV product?
Yeah, I'd say we typically would expect to see something in the 45 to 50% range at a minimum. When it gets below that, we have seen some instances of lower expense ratios, and those are more of your long-term RV resorts. So if you look at some of the, the winter resorts in Texas, Florida, Arizona, for instance, those folks might be coming for 6 months minimum, and they may be leaving their RV there year round. So they may have an annual pass or annual lease for that RV space and only be using it 6 months a year. In those cases, some of them are paying their own utilities. So if they're there for more of a longer period of time, some of the utilities will be put in their name and that will come down. But generally, to see that delta between 30% up to 45, it's typically wrapped up in the management and ownership costs, and then also the utilities. Those are the two main areas that we see the higher expenses for RV.
Okay, got it. Good insights there. So obviously, I can tell you like to pound the pavement and get after the calls, and basically just reach out to folks and try to do business with them. Is
Yeah.
is that the best part of your job? What would you consider as like the best part of your job and the worst part of your job?
Yeah, I would say, the best part is just the deal making process. We're all sales guys at heart here. We enjoy making deals. And I think, being a national group, doing the Zoom call, it's great getting in front of you at the conferences, the people, the manufactured housing industry is a pretty small group compared to maybe multifamily. So, getting to the conferences and doing the networking with some of the groups we've worked with. But I think the best part is, getting a deal done that's a win-win-win for the buyer, the seller, everyone involved. There's obviously some complications that always come up on every deal. Not everyone is the smoothest one out there, but I think kind of being that advisor to both groups during the escrow and closing process and keeping everyone's best interests in mind and making everyone happy and closing a deal is by far the best thing. That the seller's happy, they're able to dispose of the asset and take that capital and put it to work somewhere else, or it could be a longtime owner that's looking to retire and enjoy their retirement. And then also the buyer that's coming in and adding to their portfolio, generating some passive income prospectively, or just adding to their portfolio. So I think those are some of the best things. And in that process, some of the more difficult pieces come out as far as retrading, and some of the hiccups that come up in the due diligence process is probably one of the more difficult things, but it's also one of the most rewarding things when you can get them done.
Got it. No, that's good stuff. I'm curious too, talk to a lot of first-time buyers, and I know that as a broker, you're probably desiring a second, third, 10th-time buyer because
Sure.
the ability to close is higher. What advice can you give a first-time buyer to get on your radar, get 10 minutes of your time and be taken seriously?
Yeah, we talk to a lot of first-time buyers and have no problem communicating with those folks. We do a lot of calls with groups that are trying to get into this space, and happy to share our insights on the market in general. I would say just do your homework on the deal. I think if you get an opportunity sent to you from a broker, or you have an off-market listing you're looking at, do your homework, dig into the material a little bit, look at the due diligence items that are provided, maybe before making a call, because, if you just call and say, hey, I just saw this email, can you break it down for me? And, it takes 30 seconds to kind of give you the elevator pitch on a specific deal that we emailed you and you haven't even looked at it. It's kind of frustrating because there's a lot of very basic things that you're looking at. And of course, we get a lot of people that come through and, they all want the same thing. They want $100,000 or 100,000 person MSA, median home price over 100,000, city utilities. You know what? Everybody wants those deals.
Right.
So don't think you're the only person looking for that. There's a ton of people in this space looking for the exact same asset. So find a way to differentiate yourself, know the market a little bit. Why are you pursuing this deal and why is it attractive to you? Obviously, that will get us excited to work with you and represent you and present your offer in the best light to the seller.
I think that's good advice. And from the legal side, I represent clients a lot of times in their first deal. And I've got some clients that have really done their homework, and it's like, man, you could pass it off that you've done 10 deals. And
Yeah.
then I've got guys that's like, have you ever been to a mobile home park? Have you ever, and I don't tell them that, but I mean, my scope of work ends up growing a lot of times on those, so it ends up
Sure,
working out okay for
sure.
me. But it's just like, you got to do your homework. You got to get up to speed because it's a super competitive marketplace. And you're talking about
Absolutely.
like, unrealistic deal criteria. I'm in this Facebook group on MHP stuff, and somebody the other day posted something like looking for 100+ pads, MSA of at least 100,000,
Yep,
private utilities, 9 cap or higher. And I'm just like,
exactly.
I almost like followed it and said like good luck so that I could, if anybody threw a lead out there, I could jump on it. But I'm like, no one's gonna throw it. It was like, oh, 2% finder's fee or something. Like if somebody found a deal like that in this market, they could probably make a lot more than 2%. They could probably make
Yeah,
10%, So
yeah.
or take it into a joint venture. I just entered a joint venture last Friday with a guy that brought 2 deals, first time deal, but he brought 2 deals. So I was going to be his lawyer. Well, it turns out now I'm going to be his partner on it. So it's like he's going to get paid a heck of a lot more than 2% finder's fee
Sure.
because he found the deal. Find the deal is one of the key criteria
It
for being
is.
successful in this business.
Yeah, and I totally agree with you. And I think a lot of people that say, hey, that deal might not be a fit. Let me tell you my deal criteria, and they list the similar items you said. And it's our kind of standard answer here is it's more jokingly, but it's just to kind of give them perspective. Is hey, if you find any of those deals, let me know. I'll buy it
Yeah.
because they just don't exist. And if it does exist, then you should buy it. And you're probably not going to see it marketed from a broker.
Right. If it does exist, I mean, I think they exist. They're really hard to find, and they're not on somebody's email blast.
Exactly.
They're pocket listings at best. Probably not pocket listings. They're probably direct to seller, and
Exactly.
and they'll
So
probably still
yeah.
have some hair on them. I know, like I live here in the Kansas City metro. I've looked at every single park in the metro, and there's probably 80 if you go out wide enough. And I've
Mhm.
looked at, written them letters, called them, driven there, and they're almost any of them of substance are almost all institutionally owned at this point
Sure.
because it's such a good market. Because it's not realistic for me, at least in this market. I had 2 that I was close on. One was like 80, one was 374, I think. And I thought I was close, and they both went under contract with some big private equity group, and
Sure.
I don't know what they paid, but it had to be a low cap rate, I think, and because it was a tough market to be in right now on the buyer side, but
Yeah.
there's still plenty of deals out there.
Yep.
It's just a lot harder than it was 2, 3, 4 years ago.
Absolutely. There's the competitive nature of the buy side has got increased only the last few years. And I think even through COVID, it's increased even more. Some of the stuff that makes the news, Carlisle, Blackstone, some of the large buys they're doing has probably brought some more attention to this space just because it is making some of the larger financial news sectors and getting some other private equity groups interested in the space. On the smaller deals, there's still opportunity for private investors for sure. You just got to be diligent and find the right deal for you.
Yeah, no, totally agree. Let me ask you, do you have any lessons or tales kind of from the school of hard knocks, either from one of your own missteps or ideally from somebody else? I like to learn from other people's mistakes whenever I can. If you have a kind of a horror story or anything you can share that others can learn from?
Yeah, I mean, there's always some issues. I don't know if we have any horror stories from our perspective. I know one thing I would say just really do your homework and your due diligence up front. And that's from a buyer, that's for a broker, that's for you representing folks on contracts. One of the biggest issues we probably see and run into on these transactions are kind of the unknowns, right? Whether that's something that comes up in due diligence or the paperwork, but if you can really dig deep on the front end, we try to get all of our due diligence materials as soon as the listing contract is signed and provide that information to all of our buyers on our website prior to listing it. And one of the big reasons we do that is, we don't want to have these big unknowns going into the due diligence period. Always disclose everything we know about the property up front. Because the last thing anybody wants from a buyer or seller is, a hiccup to come into play during due diligence. And we've obviously ran into our fair share of those and have found a way to navigate a solution that works for both sides. So you have to know the deals inside and out, really do your homework, really understand everything about the deal before we take it to the market. And I think that goes for buyers too. Before you have an LOI, really make sure you talk to the broker, the selling party, make sure you understand every single thing about the deal, all the hair that could be on the deal, and make sure you're comfortable with it going in, and have some sort of bandwidth, plus or minus, before it closes, that, if something does arise, how are you going to address it? Are you going to just drop the thing completely? Or are you going to try to make it work? Because I think everyone's best interest is to find a solution to make it work. And that's definitely what we always push for.
No, that's good. I think one thing you said that I like is to get all your stuff, your due diligence stuff ready. As the seller side, I know I look at deals every day from brokers, and the good brokers all do that, where you look at, you get a huge deal room with stuff, a packet full of stuff you have to look at. Some guys have, you see like the teaser sheet, and then it's like, no, that's the whole offering memorandum. It's like, okay, this is not very much information, and they kind of hide the ball, and they're really doing their client a disservice, because when I'm underwriting the deal, if I don't find it, I guess I get away with it. But most likely I'm going to find it during due diligence, and then I'm going to say, this is different than you represented, and it's basically giving me justification to retrade on price or terms, and that's not fair to the client. But it's like they think they're going to get away with it. But as opposed to, if everything's already out there, well, you saw that. I saw one. I'm trying to think what it was the other day. I think it was like an environmental issue. They're like, there is an environmental issue, but we got to phase 2. We took care of the tanks or whatever. So it was disclosed, and it was solved, as opposed to somebody trying to find it later. Oh, I didn't know there used to be a gas station here. That means I got to hire a lawyer to look at 5 more things, and I need to retrade. It just seems like common sense, but there's some serious fly-by-night brokers out there, and there's one guy in particular that is not licensed in maybe any state, and I called him out on it one time because he tried to screw me out of a deal, and I was like, hey, are you even licensed here? And he just like disappeared. But I'm still on his email list. He just disappeared from me. But it's like, that guy is out there pitching deals on one piece of pro forma paper. I'm like, this is, and he must be working to some degree, because he's in the business and been in the business for several years. But it's just, he's not with the big national outfit where you guys are not, high quality. But anyway, I'm not going to name him. I don't want to bag on the guy too much, but it's frustrating.
Definitely see a lot of that, a lot of pro forma based offering memorandums. And our philosophy is we always write on the current financials, trailing 12, and base our price off that, and obviously adjust the cap rate in accordance to each deal criteria. So definitely see a lot of that going on. And you hopefully no one will see that from us, and it's not really how we operate.
No, I think that's the best way to do business. Speaking of your listings, do you have a list? I know you've got several listings right now. Is there one in particular that you'd like to give us a teaser on, either a new one or the one you can't get rid of that you're looking to get rid of, or the best, the one that I need to buy? What could you say?
I think I just looked. We have, 17 active deals right now. 5 of them are escrow. I think it totals about $100 million of product right now.
Wow.
Some of the newer ones we've just listed are some interesting plays. We just listed a pretty interesting property in Baton Rouge, Louisiana, that is a brand new construction mobile home community that was done as a build to rent, which I find really interesting. We've sold some build to rent single family rental communities on the multifamily side, but this would be the first asset we've done on the manufactured housing side.
How many lots, and I interrupt you, and what cap rate are you asking on that? Because so many people don't like the park on home model, but I have heard and seen more and more of those coming down the pike.
So it's a 77 site community in Baton Rouge, gated community, all brand new homes, targeting about a 6 cap, which is about 100 basis points higher than the apartment market in the area. But we see a need for affordable housing. It's 100% full. They have a wait list. There's a lot of people that are moving out of apartments and seeking this type of arrangement. We're just seeing people even with COVID, moving out of apartments, trying to get more space. And I think the rental aspect of manufactured housing has a lot to play, especially in some of the newer high quality homes. Your price per square foot to rent one of these homes is less than an apartment could be, and you're going to get a nicer home on some of these newly built homes. So I think that's a really interesting deal. We just listed a 3-park portfolio in North Dakota. That's kind of a unique 410 sites. a huge opportunity to come into a market with scale, which is obviously something a lot of buyers are looking for.
Right.
Everybody's looking for kind of that one-off deal, but then they say, what else is available in the area? And that one's interesting. It's a kind of a higher lot rent market, kind of association with some of the energy companies and bases there in North Dakota, but coming into a new area that you may not be involved in and get 3 parks and 410 sites is extremely appealing to a lot of folks.
Yeah, that's definitely scale. I've had a couple people reach out to me on LinkedIn, just say stuff like, hey, can you put together 50 million or 100 million in portfolio right now? It's like, that's what the big players want. They don't want to buy a bunch of $1 and $2 and $3 million deals. And it's hard. I mean, I don't have a $100 million portfolio laying around to sell, right? But not a lot of people do. And the guys that do are buying up others. So there's definitely a new massive appetite from big players.
Yeah.
And I've had people contact me like, oh, I've got an in with Blackstone Group, or I've got my friend works at Carlisle. What can you put together? And then it's like unrealistic expectations too. But I want the yield that you put together on $1 million deal.
Sure.
Like, it's hard to buy a portfolio at a 9 cap, right? You can maybe buy a one-off deal at an 8 or 9, but portfolios are probably looking in the 4, 5, 6 range, probably 4 or 5.
Yeah, the portfolio, there's obviously a little bit of a lower cap rate just because the economies of scale, right? Everybody wants more lots. A $10 rent raise goes a lot further on 500 lots than it does on 50. So there's obviously a premium on the portfolios, and definitely enticing. And you're going to see a lot of people interested in those portfolios, but doesn't mean that they're not as common as the one-off deals. Is from our perspective, we sell a lot of single parks, but we also do a lot of portfolios too.
Got it. Great. Well, Jared, this has been good. Really appreciate the time today. Where can people get a hold of you? How can they find you?
Yeah, absolutely. My email is probably the best. It's the letter J, BOSCH at NorthMarq.com, and that's NorthMarq, like direction north, MARQ. You can all see all of our active listings. Like I said, we're a listing group. All of our available listings are on our website at listings.northmarq.com. You can go and see everything we have available. You can also find us at NorthMarq Manufactured Housing Group on LinkedIn. We post all of our market reports on there that we put out every month. We put a sales report out of what's transacted the previous month. And we also have a really good research group here that puts out a quarterly research report on the manufactured housing industry as a whole. It talks about home shipments, cap rates, rents across the country. So we try to be a great resource for people nationwide, share a lot of information. If anybody wants to get added to our distribution list for listings or for those market reports, please reach out. Again, emails jbosh@northmarq.com, and my number is 602-952-4049.
All right. Thanks, Jared. Appreciate it.
Appreciate it. Thanks, Ferd.
You got it.